Great ambassadors, honoured guests, thank you very much for the opportunity to present to you. My name's Dave Murray. I am not our Africa economist. Razia Khan unfortunately couldn't be with us. I will try and do as good an impersonation of Razia as I can and just give you a swift summary of what Standard Chartered Bank believes the outlook is for Africa. I've got about 15 slides I'll share with you. We'll look at the historical trends just to set some context, and then we'll spend a little bit of time talking about the outlook and some of what we can expect looking into the future. So, as the ambassador said in his introduction, Africa is not an homogeneous continent. 54 countries, each with their own set of rules and regulations, their own cultures, their own challenges from an operational perspective. So it would be remiss of me not to comment on, as I say, what are the obvious challenges for Africa. The opportunities are equally obvious, and I think the ambassador did a really good job in laying out some of what is an extraordinary story from a demographic perspective, from a population development perspective, from an infrastructure build perspective. So we will take you through hopefully a little bit of both the opportunity and the risks. So how do we see the world in 2015? The darker shades are the better growth opportunities in 2015. You can see that Africa has its fair share of dark shades. We have Asia also making up some of the more positive aspects of growth in 2015. As the ambassador mentioned, 6 of the 10 fastest growing economies in 2014 were African. So undoubtedly, we have come of age as a continent. The growth dividend, which people have been talking about for a long, long time, is coming through, and we'll put some numbers to that. Just looking at the continent of Africa and putting some context as to which are the economies that matter, it's an interesting list. So from left to right, from 1980 through to 2014, the list stays remarkably similar in terms of the countries that are represented. Clearly the order has moved around. If you have a look at what is an extraordinary growth performance, names like Nigeria, which has grown 9 times, the GDP has grown by 9 times since the 1980s. You have countries like Ethiopia, which equally have grown 7 times, Angola 25 times, but some remarkable growth rates over the last 24, 25 years. There have been some stumbles, and perhaps just to point out a couple, the DRC, which has slipped, still in the top 10, but clearly has come from a much higher base. And we've had a country like Zimbabwe, which no longer is in the top 10, which made an appearance in the 2000s. But I think that gives you a profile of what are the big 3, and then another group, which, albeit much smaller in terms of base currently, are growing equally as fast. As far as trade partners are concerned, this is a really, and something which we'll talk about a little bit later on in the program. The blue circles represent 2014. The green circles is trade in 2000. And I suppose what I would point out is, first of all, intra-Africa trade, which has grown exponentially. Clearly China and India, similarly, you have seen an enormous amount of trade. But just to put into context, if you have a look at relative exposure to Europe and the US, the developed world, you can see that emerging markets now swamp the US and Europe, now swamp the exposure in terms of trade partnership. So a really interesting dynamic which has happened over a very, very short period. That's 14 years where you've seen that type of trade shift. Just focusing on China, again, if you look at the last 20-odd years, trade between Africa and China growing from 3.9 billion to 222 billion in 2014. Interestingly, looking at the first half of the year, there has been some change. Imports from China out of Africa are down some 40%. the overall trade number will stay relatively similar in our view over 2015, with imports into Africa having grown not a dissimilar amount. But again, in terms of flows, in terms of Africa being a trading partner of choice, enormous growth and very much in favor of emerging markets, still a great opportunity for intra-Africa growth, and that remains the greatest trade opportunity for the foreseeable future in our view. Challenges, there are challenges, and I suppose ironic in a way that we've chosen today to talk emerging markets and to focus on Africa. Foreign currency markets have been extraordinary. I'm originally from South Africa. The rand traded from below 13 to the dollar. It hit 14.06 this morning. It's since recovered to 13.35, but I think that just gives you a sense of some of the risks. High beta assets are not in favor. Risk aversion is rising. And clearly the broader commodity cycle, global growth, there are some real concerns in the short term. So I thought I would just throw up for you, and this is one of the challenges. How does emerging markets, and more specifically Africa, manage an extremely volatile foreign exchange and interest rate environment? So as you can see, something like Angola, currency depreciation around 30%, and in fact there's a parallel market. There is an argument that Angola's still got quite a long way to go on the depreciation front, so the parallel market running at about 15% cheaper than the official depreciation number. But pretty much across the board, with very few exceptions, a much weaker currency environment year on year. Clearly, a lot of that driver is commodity trends, and as I say more broadly, growth risks, where higher beta assets and emerging markets, and Africa specifically, not exactly flavor of the month. But we see this as a shorter term risk that needs to be managed, but certainly one of those risks that bears consideration. Inflationary pressures, obviously weakening currencies flowing through into rising inflationary pressures. You can see one of the aspects is much higher interest rates. So central banks, in an environment where most of the world has been cutting rates, have been hiking rates, and when you consider, Fed fund and other developed market rates, which are low single digits, pretty extraordinary numbers, which again just need to be taken into account when you consider financing requirements, the enormous infrastructure need from a financing perspective. A difficult balancing act in the shorter term. External issues, the Fed, clearly everybody anticipating and expecting the next move from the Fed to be tightening. They've moved explicitly from having the foot on the accelerator to reaching out for the brake. The China slowdown, where China's growth performance has disappointed most expectations. Clearly a rebalancing of that economy, some structural changes which are creating knock-on impacts. And just given the extent of Asia and China as a primary trading partner, again, you're seeing this reflected in Eurobond issuance numbers, which are showing a rising interest rate or rising yield profile, making the cost of debt more expensive. You add to that weakening currency trends, so the funding of external debt starts becoming a little bit more of a management issue for African governments. Deficits, downgrades, and debts. You can have a look at debt levels as a percentage of GDP, pretty much across the piece, showing a rising profile. Not something that, in our view, should result in panic, but something to be aware of. There is a little less flexibility in terms of the ability to increase those debt levels materially from here. And you can see the fiscal strain coming through, which is, again, not surprising in high growth environments. Almost all countries running a fiscal deficit. And clearly, just in terms of shorter term pressures, something to be aware of. Okay, Sustained growth, and this is one of those macroeconomic numbers which, in terms of underpinning a more sort of sustainable growth picture, needs to change, and herein lies perhaps the opportunity. The opportunity to increase investment rates, to increase saving rates, but quite clearly the gap between sub-Saharan Africa investment rates and savings rates and what we see around the rest of the world, focusing here on Asia, a massive gap. Talking to the demographics, again, just looking at the top 20 most populous countries on the planet. Africa had 3 in 2010. The expectation is for that number to double by the time we get to 2050 at least, and by the turn of the century, roughly half of the world's 20 most populous countries will be in Africa. As the ambassador mentioned, a more than 100% increase in population expected between now and the middle of the century. If you add to that some of the dynamics around working age population, sub-Saharan Africa showing a very fast increasing slope. We will overtake Asia as we get through the middle of the century in terms of the percentage of working age population. And that's clearly a really important dynamic in terms of consumer growth story and what Africa represents to those who are interested in emerging opportunities and interested in growth. Productivity. This is really interesting. Just looking at agriculture for a second, it's something which clearly the world is obsessing with at the moment, with global population expected to rise from around 7 and a bit billion to over 9 billion. There is a thesis that the world will have to increase productivity in terms of food productivity by 70% over the next 40 years. Africa, again, represents an unbelievable untapped opportunity. So about 60% of the planet's unused, potentially arable land sits in Africa. That's a pretty extraordinary stat. If you look at Africa's arable land, roughly 80% of the potentially arable land is still undeveloped. If you look at productivity trends, Africa absolutely nowhere in terms of yields. So this is looking at cereal yields, and clearly with the addition of some technology, the build of infrastructure and scale, there is an amazing opportunity for Africa to take the lead in agricultural growth and development. As far as water resources is concerned, looking at Standard Chartered's bank core footprint, so emerging markets, Africa again standing out as relatively strong from a water resources perspective. Oil price seems to have dominated most of the headlines over the last 6 months or so. Clearly there is a big exposure when one looks at West Africa to oil prices. But interestingly, it's not bad for many countries in Africa. And so I thought it would be interesting just to throw up the exposure to oil. Those that have the bars to the right of the y-axis, clearly positive, benefit from falling oil prices. Those to the left take some pressure from falling oil prices. So just to leave you with some hard numbers in terms of Standard Chartered Bank's forecasts, there is a slowdown which Africa will be exposed to. It's a global slowdown in growth, with growth disappointing relative to expectations perhaps of 12 months ago. We are looking for that to recover into 2016, so to push up to around 5%. Inflation again pushing up gently to just over 8% at a continent level. And current accounts expanding quite aggressively into 2015 with the growth slowing down, but yet still a huge need for infrastructure spend, but flattening out into 2016. And you can see the profile of some of the core countries which we cover. Clearly some differential, but I think that the thesis for Africa remains. It is an extraordinary growth opportunity, and I would perhaps leave you with one of my philosophies, which I think is equally applicable to investing in Africa, and that is to be aware of the risks, assess the risks, but obsess about the opportunities. And I think for any of us who are in the business of assessing risks but want to obsess about opportunities, no better continent on the planet to focus on than Africa. Thanks very much.